Before we begin with today's market analysis, I would like to mention our new channel membership options. This is a special introductory offer which will open access to members-only trading strategy videos that are based on high-value, high-conviction investment strategies and are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Please note, this is a limited time offering of just $9.99 per month, but members that sign up during this introductory period will be able to lock in this new low rate for the entire duration of the membership. Again, this early sign-up period will allow you to lock in this low introductory membership rate for life, and these new low introductory rates will only be made available for a limited time. Monthly membership prices will be going up after this short introductory period ends. With these comprehensive, members-only trading strategies, I only choose high-quality, high-conviction stocks that are easily accessible, with relatively low share price values that are designed for easy trade positioning, and combined long-term trading gains are expected to far outperform the monthly membership rate of just $9.99 per month. Join now to lock in your low introductory rate and start trading stocks with the pros. Now back to the video. Here we have the 2-hour price chart for NIO Incorporated, stock ticker NIO. So as we can see here, we're starting to trade under a bit of selling pressure, and we need to really kind of zoom in on this chart and take a closer look to see exactly what is going on here. So as we can see, in the prior videos, we have been pointing out this prior price gap, which formed previously. This was a movement that was in the positive direction. And obviously that is a bullish development. But what that can often mean is that when prices fall back into that range, that price gap is going to need to be filled. Essentially, the reason for this is that there are so many buy and sell orders that are still open in the market that were never filled as this price action simply jumped over or skipped over all of those orders. So at some point, if you start to fall back into that region, those orders start to get tripped. And we do start to see prices kind of fill in whatever price gap was filled. This can happen in the positive direction and in the negative direction. So currently, that does appear to be roughly what we're seeing here. If we kind of drill in here a bit more, we can see that this downside price movement has essentially filled this gap, with then prices kind of starting to stabilize sideways here after all of those prior orders have been filled. So this is a somewhat predictable price movement, but we're starting to move back into support levels now, which are quite critical, and we are going to need to see a bounce here relatively soon in order to keep many of these structures intact. So a lot of this activity really does call into question what exactly is going on here in terms of our broader trend perspective. So currently, to the downside, the price level that I've been watching comes in at 441. Currently, we're trading below 450. We closed at 449. So we're somewhat close to this trading level right now. This is an important support zone, which has been tested on 2 separate occasions, as you can see here. This is the initial test came in during this would be roughly the July 9 trading session. And then this level was tested again during the July 19th trading session. So, we do have a fairly strong support zone here that does need to maintain itself in order for us to maintain our series of higher lows. In addition to that, a downside break here of support would essentially call into question this prior trendline break that we have been watching now for some period of time. On 2 separate occasions, we were able to break above this longer-term downtrend. I can kind of pull out here again, just so people can kind of remember what it is we're talking about. So, we have seen this sort of descending triangle formation break to the top side, which would be a positive development because it would suggest that, this lower downtrend has completed itself. Overall, we do need to continue watching this level because we do want to see a more convincing break here to the top side. Some of these price movements have been encouraging, but when we start to see breaks of support, occurring later, it really does sort of call into question the validity of those prior price moves. So here we'll just kind of drill in here now that we understand this is the major trend pattern that we're watching here, and we do need to see this area kind of maintain itself so that we can keep these prior lows at 360, so that we can keep these levels intact. So currently, we're not totally in panic mode here just yet, though, because we do have to remember that we do have more than one support zone here, sort of protecting the stock to the downside, and then you've got this longer term momentum activity in the relative strength index, which does continue to point in the upward direction. As we can see here, prices have managed to maintain this upward price trend since roughly July 11th. This has managed to, this trend line has contained the relative strength index, and this does suggest that positive trading momentum continues to underlie the stock. And if we actually did see a major break lower here in share prices, this would lead to a bullish divergence. If we saw this trend activity maintain itself in the RSI. So, overall, I would continue to watch this series of support levels that we still have to the downside. I understand that it doesn't feel terrific to be saying that the share prices head lower like this. But we would really need to see a few more breaks of support in order to really change the bias here, and in order to really change the outlook into the positive, into the negative direction here. So currently, we have not yet broken below this 440 support zone. We would first need to see a break here. And then we do have some additional support here that's found at roughly 415. And both of those are to be seen in advance of the more major support zone, which is found at 360. So, as you can see here, the levels to the downside, there are layers of support here. And they're not equating to drastic price moves. I mean, we're not seeing, declines of 10, 15, $20 here. We're talking about, declines of, 80 cents or, something along those lines. So, these are not significant moves to the downside. But, at the same time, we would like to see a more convincing break of this descending triangle pattern. So these are really the levels to watch currently. As you can see here, also, we do need to point out that prices are finding a bit of resistance at this moving average cluster, with prices currently showing highs of 459. So, a break above here would also be encouraging. If we were able to sort of break above this moving average cluster, you'll notice here that this trend line is also coming into contact with this area very soon. So, overall, this trend pattern here to the downside is facing a sort of make or break moment. I mean, at some point, we're going to have to see a decisive price move here. And as long as this trend line continues moving lower like this, it's going to be harder and harder for that downtrend to maintain itself. So it seems to really just be a matter of time before we do see a forceful break here of these moving averages, and then this moving average, this moving average cluster. And then this downtrend trend line. So currently, these are the price levels we need to watch. We really do want to see a break above roughly $4.80, which would signal a more massive move higher. So here's the current market analysis for NIO Incorporated, stock ticker NIO.